Hi everyone and welcome to the weekly update with me, Rich Perry, market analyst at Handtech Markets. Each week I'll take you through the key events I believe will be driving your investments in the coming days. Now, is this a short covering rally on the oil price, or is it anything more than that? Well, I don't think it is anything more than that. I think it's just volatility just playing out in the markets. There's a bit of fear, and obviously the big short positions that were obviously clearly on the oil price, and they have had to unwind, and I think that's just what Thursday and Friday was playing out. Don't necessarily see anything change to the fundamentals going into this week on oil price, and I think it's going to continue to drive market sentiment in the coming days. Now, I think that is interesting, certainly for the early part of the week. Maybe towards the middle of the part of the week, we've got more focus on the Fed coming forward, because obviously this is the next FOMC meeting. This is the first meeting since that rate hike, and it'll be really interesting to see what the statement says. There's no real chance, I don't think, of any rate hike, again, because there's no press conference and no sort of staff projections either. So we're going to get sort of more information out of the statement, I think, and it'll be interesting to see what the wording of the statement comes out with this week, whether it starts to focus again on the oil price impacting on global growth, whether the international factors again are in the sort of back in play, which is the reason why in September the Fed didn't move on rates. So it'll be interesting to see how this Fed statement is worded and whether it has an impact going forward on the next meeting, which is the one that the Fed would want to be choosing as the next time it hikes interest rates, and it'll have to be that way if it can get 4 rate hikes in this year. So that's the two main drivers this week. Also, we've got some other central banks, but I'll talk about that in a bit. But how is this all sort of playing out in the Forex markets? Well, we're seeing certainly the dichotomy of risk playing out. We're seeing the safe haven trades with the euro and the yen stronger on the weaker oil price, and also the risk currencies such as the Aussie and the Kiwi, and to a certain extent sterling as well, playing around with the risk trade. When you get risk back on board, you see the rallies in those those Forex markets. So on Monday morning, we've seen the oil price falling back lower again, and hence we're seeing the commodity prices currencies coming back under a bit of pressure once again, and the yen and the euro strengthening. So on the euro, well, it's sort of buzzing still between that 108 area and 109.50. It'll be interesting to see if, because the bottom of this support band is being tested now. We've had that ECB assessment from Draghi that he's going to be sort of pushing for more easing at the next meeting, and that sort of dragged on the euro lower. It'll be interesting to see if that floor around 108 can survive. At the moment, it's being tested, just hanging on. Now, cable had that sharp rally back towards the downtrend. Is this already a busted flush on cable? It certainly looks as though it's rolled over a bit this morning, giving a few technical signals. Maybe 43.50 is the big overhead resistance that continues to hold back from a continued rally. And dollar yen, I think that is a big market that sort of reflects the sort of mood of the markets at the moment. And we've had this rally, sharp rally, Thursday, Friday, last week, sharp rally on dollar yen. Sort of seemed to peter out, didn't it, around 118 to 75. That is the big 2016 sort of pivot area resistance on dollar yen. Needs to break through that for a continuation of this rally. So what about the equity markets? Well, we've had, again, I mean, equities are by nature higher risk, and therefore they come under a lot of pressure when you see markets flying out of riskier assets into safe havens. And equity markets have started since 2016 with an absolutely calamitous decline. Whether it is just a short covering rally or not remains to be seen. I think it is a short covering rally, and I think they'll be struggling to put on more gains than we're seeing at the moment. We've got some resistance levels that are coming in on these charts, so 6,010 being the key one on FTSE, and 1950 on the S&P 500 as well. So for commodity prices, well, we've seen the gold price just slightly rallying higher. I think again is a bit of a disappointment. Actually, the gold price hasn't rallied more than it has done. It's sort of slightly poking above some key resistance, sort of 108.98, but the rally high from January, early January, still remains intact at 1,112. Still hasn't tested it in any really sort of big sustainable way. So I'm still a little bit disappointed by this rally on gold, and I'm not entirely convinced it will be breaking out. And obviously that oil price, well, we're back above $30 following a huge rally that we saw on Thursday and Friday. Is it now already finding up against key resistance? 32.80 seems to be pretty much on both Brent and WTI. Seems to be a sort of bit of a resistance area there. But as I said, there's no real fundamental changes to the oil price at the moment, and in terms of the demand and the supply. In fact, the oil price rallied on Wednesday, or started to rally on Wednesday, on the back of the weekly oil stocks. So I'm not entirely convinced by it. So it'll be interesting to see. But yeah, I'm not convinced. Anyway, for the rest of the week, well, we've got the economic calendar playing out. And as I said, Fed is the big focus on Wednesday. You've also got the RBNZ and the Bank of Japan on Friday as well. So Bank of Japan could well be another one that sort of signals a bit of a change. Possibly more easing, but not entirely sure yet as to whether that's the case. This rally on dollar yen in the last couple of days may sort of help that argument, or the argument against further easing. A few bits of growth data as well. First look at Q4 for the UK. First look at Q4 for the US as well. Be interesting to see how this sort of end of 2015 played out for those two countries. And the flash Eurozone CPI on Friday. Will an improvement in the CPI data just be enough to once again persuade the hawks on the governing council of the ECB not to really do too much in terms of easing? And would that again be a disappointment for the market? So lots going on actually this week, and I wish you good luck in your trading. Don't forget the Fed on Wednesday. Thank you very much.